Understandably, investors have been concerned about the tens of billions of dollars that Microsoft has been spending to boost its artificial intelligence capabilities. But in the latest quarterly conference call held with Wall Street investors, Microsoft's CEO did a lot to assuage some of those concerns. I wanted to share with you the progress Microsoft is making in its AI development and the reasons why investors can feel reassured that these investments will bring back sufficient returns. I want to thank the Motley Fool for sponsoring this video. Visit fool.com/Parkev for the 10 best stocks to buy now. So the thinking that goes behind Microsoft in their investments in artificial intelligence are two fundamental things. First, they want to drive innovation across a product portfolio that spans infrastructure and applications, so to ensure we are maximizing their opportunity, while in parallel continuing to scale their cloud business and prioritizing fundamentals, starting with security. And second, and perhaps more importantly, they say that they're using customer demand signal and time to value to manage their cost structure dynamically and generate durable long-term operating leverage. And the reason why the second part is most important is because they're not just going out and spending these tens of billions of dollars on artificial intelligence without understanding where demand is for these products and services. They're observing how much they're generating in revenue and profit as they move along before they continue making those investments. So they may, let's say, spend $2 billion to develop some capability, and then they observe how customers respond to that before they spend an incremental $5 or $10 or $20 billion. So they move forward incrementally and they observe how customers respond, and then they move forward again. So they're not just saying, we're going to throw $30 billion at this and then we'll see how customers respond. They're not doing that. They're moving forward incrementally, observing how customers respond, moving forward again, observing how customers respond. And in that way, it's a lower risk investment because they're not doing it all at once without getting any feedback from customers in terms of how much revenue they're generating. They're moving forward a little bit and they're getting a customer response, customer feedback, sales, revenue, profit, and then they move forward again. And so in that way, it's less risky. It's less of a question mark because they know, okay, customers bought this latest thing that we produced, and then they bought this other thing that we produced, and then in our phone conversations, they're telling us they'll buy this new thing if we create it. And so in that way, it's not that risky. I mean, it's risky because anytime you're spending tens of billions of dollars on a new product or a new service, it's risky, but it's less risky when you're doing so incrementally, when you're iterating the product, and when you're getting feedback from customers and incremental sales and orders and profits. So given that, they expanded their data center footprint, announcing investments across 4 continents. These long-term assets around the world will drive growth for the next decade and beyond. So these aren't investments, these tens of billions of dollars they're spending are not investments that are going to need to be replaced in the next year or 2 or 3. These are long-lasting investments that will bring revenue and profit to the company, they're saying, across decade and beyond. Now, fueling those investments, the company is spending money on new AI accelerators from AMD and NVIDIA, as well as our own first-party silicon, Azure MAIA. Now, the new player here is AMD, and I've been waiting to see this from AMD. We've all heard, if you've been following the AI investing trend, we've all heard how popular NVIDIA's accelerators have been. That's no surprise. But AMD recently came out with their MI300X AI accelerator, and it's good to see that they're gaining traction in this market. It's good to see Microsoft highlight AMD as one of the accelerators that they're now purchasing. And the reason why it's good is because the market had become so reliant on NVIDIA that if there would be a disruption, like one that was rumored, remember the rumors a couple of weeks ago about NVIDIA's delayed Blackwell technology, AMD can step in, right? They can step in and be that other provider. And companies like Microsoft are making their own first-party accelerators. For Microsoft, they call it Azure, MAIA. Amazon's doing the same thing. Alphabet is doing the same thing. So these large hyperscalers are building their own accelerators to diversify that supply chain a little bit. NVIDIA had been reported to have over 80% market share in the AI accelerator market. So it's good to see some diversification. It's always good to have diversification in the supply chain because it's too risky to rely on one provider. And so how does Microsoft know that customers want their products, the AI capabilities? Well, already they have over 60,000 Azure AI customers, and that's up 60% year over year. And the average spend per customer continues to grow. So not only are they adding customers for artificial intelligence, but existing customers are spending more. And one of the other benefits of developing these AI capabilities is it adds customers. And then since Microsoft has so many other products, the customers that come for one thing might also buy something else, which Microsoft says is already happening. The number of Azure AI customers also using their data analytics tools grew 50% year over year. It's not unlike a McDonald's restaurant that might offer a promotion for a new product. And then when the customer comes in to buy that new product, the burger or whatever it might be, they might also buy a soda. They might also buy some fries. They might also get an ice cream or a coffee, right? Those incremental services that you sell when you attract the new customer for a new innovative product. That's what's happening with Microsoft. And then this quarter, they introduced a new first of its kind real-time intelligence capabilities in its data product that unlocks insights on high volume, time-sensitive data. So the businesses that are paying for this service are gaining insights that then helps them unlock revenue and profit opportunity for themselves. So the whole supply chain of artificial intelligence is improving business capabilities, and businesses are willing to pay for these improvements because that allows them to generate more profits. And so I've been saying this artificial intelligence investing wave is the real deal because it's delivering tangible results. It's delivering tangible benefits, tangible improvements that everyone is willing to pay for because it's improving whatever it is that they're doing on a daily basis. So for all of these reasons, I think investors that are concerned Microsoft is spending too much money on AI can feel a little bit of relief because they are getting good customer response and good customer acquisition and good increases in average revenue per customer. Before I let you go, let me tell you about the greatest deal on YouTube. With just a click of a button, you can get free financial analysis from a professor with decades of investing experience. So what are you waiting for? Hit that subscribe button, and I'll see you again soon.